Yeah, good morning, everyone. So yesterday we saw US market correcting, mainly on account of uh, some indication from concerns indicated by Fitch rating, which has put AAA US rating on negative watch, considering that if the debt ceiling proposal is not corrected, then there could be larger impact on the economy of the US. But what we had seen in the past that these things struggle, and it's a more of a political stand where two parties fight with each other, and at last the ceilings are getting lifted. So automatically thereafter things become normal. So it's a more of a short-term issue and more of a sentimental in between. We are seeing correction on that account. Apart from that, even the Fed minutes which came out yesterday was more of a on a similar line what was indicated uh, in the Fed meeting press release, wherein the Fed has indicated that uh, the decline in the inflation is on the right trajectory, and if this continue, then quite possible that the interest rate increase may not be required. But it's all depend on the data, how it comes, and they will be taking decision on that. So no impact of that. Uh, Taking clue from the US market, the futures are a bit positive. One or two companies has come up with good number over there, and Nvidia, which is more of a IT company, has shown good result, and shares has moved up in the aftermarket by almost around 24%. Uh, so this can have some positive impact on the US market, whereas Asian markets are seeing some softness, wherein Hong Kong is down by almost around 2%, mainly driven by Hong Kong Bank coming off, HSBC coming off, and also Lenovo, which has reported poor result, has declined by almost around 3-4%. Whereas some mixed reaction in there in the Asian market, Japan market is positive, and some other markets are marginal positive, but most of the other markets are showing negative trend. Apart from that, commodity continue their declining trend, though oil has moved up again by $1, but the other base metal and even the ferrous, non uh, steel and iron ore are also seeing decline. Iron ore is down by almost around 1%, and the steel is down by around 0.5%. So we are seeing a consistent decline in the base metal and ferrous metal stock prices. Mainly, the concerns is that there is a destocking which is going on and which is putting up the prices down. So overall indicate that the market is likely to here in India also likely to remain subdued, and we are near the expiry. Today the expiry, so quite possible there is could be some volatile movement towards the end. So need to be watchful of. I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. So, as we had mentioned in yesterday's call, also that we'll be witnessing a slight profit booking move, and the same was witnessed in yesterday's trading session. And for today, as taking the cues from the global markets, we feel as it's going to be a flattish opening, and it is going to be a more of a range bound move in today's session. So for Nifty, there's an immediate support of 18,200 levels, which is 20-day moving average. Approximately 3-4 days back, also we have seen Nifty has tested those levels, and we have seen a bounce back, which took Nifty all the way to again 18,400. So we're expecting a big support level as 18,200. And if that is broken on closing basis, then 18,120 to 18,050 levels will be tested. Whereas if Nifty takes the support, and again 18,370 to 18,440, 500 levels will be seen in the coming sessions. Moving on to Bank Nifty, similar pattern was seen in Bank Nifty. A profit booking was seen in Bank Nifty, and coincidentally, again, there's an important support of 20-day moving average in Bank Nifty is there as well, which is around 43,500 levels. And so if that is broken in closing basis, then 43,240, then 43,000 will be the next support zone. 43,000 will be the very important psychological support zone for Bank Nifty. Whereas if Bank Nifty takes the support from these levels, which is around 43,500, then the immediate resistance would be at 44,000, followed by 44,270. Moving on to Nifty Financial Services, it gave a closing of 19,250. The immediate support for this index is placed at 19,190, followed by 19,100. Once, so Nifty Financial Services is more likely in a range bound, and the immediate resistance on the upside is placed at 18,000, sorry, 19,380 to 19,500 levels. Moving on to stock specific, so it is going to be a conditional buy call, which will be Torrent Pharma. If it starts trading above 1,700 levels and it sustains that level, then it can be initiated for a target of 1,750 by keeping a stop loss of 1,680. So that's all from my side. I request Amit to take the call forward.
Yeah, thank you, Ayush. Good morning, everyone. So on the options front, if we look at from the yesterday scenario, also as I mentioned yesterday, also that from last 2 weeks, 4 times there is a scenario that Nifty tried to test 18,400 level, but it failed to give resistance, give closing above that level, and again we have seen from that level the profit booking has been witnessed and the supply was heavier. While on the option Y fund, we are seeing that at 18,300 to 500 strike Colorado position in yesterday's session added up heavily, while against that on the 18,400 strike put at positions got liquidated, and that position got shifted in the downside towards 18,200 and 100 strike. Now, if we look at the overall monthly scenario for the next month, also we are seeing it that still 18,200 to 18,000 strike put right positions are still holding strongly, while against that we are seeing that on the upper end 18,400 and 500 strike counter positions are added up heavily. So the current scenario as per the market would be the range bound till the time Nifty is holding 18,200 level on the daily intraday basis. Till that point of time, we should hold the long positions. Once if it breaks 18,200 level, the next possible level on the downside would be 18,050 to 18,000 strike. So in today's session, we are seeing that today is at the monthly expiry. So if in today's session, if Nifty breaks 18,200 level, then we might expect another 100 points of downside. But if in first half Nifty manages to stay around 18,250 to 18,200 270 level, then the expiry is most possibly would be around 18,300 level in today's trading session. So overall scenario might remain range bound till the Nifty is not breaking the resistance of 18,400 and support of 18,200 level. While we are seeing that the India VIX yesterday increased by 4% and gave closing at 13.11. As I said previously also that once if India VIX goes about 13.5 level on the closing basis, then we should get little bit cautious. But till the time it is not breaking 13.5 level, till the time it's not giving confirmation to go on the short front. So we should wait for the India VIX to go about 13.5 level. While as per the stock specific, we expect stocks from the positive front would be ONGC, Biocon, and Manappuram Finance. These three counter has shown some fresh long position in yesterday trading session. So we can keep watch for the long position for these three counter. While on the short front, we are seeing that the Chola Finance, Forge, and Escort. These three counter has shown some fresh shorts position in yesterday session. So these three counter can be seen more selling pressure in today's trading session. So that's it from the derivative front. Thank you.
Good morning. AppTech has posted improved set of numbers both on the revenue and the margin front. Revenue grew by 51.9% QQ and came at 178 crores. EBITDA margins also improved and came at 19.6% versus QQ of 19.3%. PAT came in at 33 crores versus QQ of 17.8 crores. Board has approved ₹6 dividend and has also issued bonus shares in the ratio of 2:5. Stock is trading at a PE of 29.6 times TTM APS. Thank you.
Yeah, good morning. Hindalco Industries result was above expectation. Revenue came in at 55,857 crores versus expectation of 47,507 crores. EBITDA came in at 5,327 versus expectation of 4,987, mainly due to margin expansion in aluminum and copper divisions. Aluminum prices have corrected over 8 to 10% from the exit of fourth quarter of FY23, mainly led by weak global demand, which is outweighing the supply side risk in the market. Novelis continues to face demand headwinds in beverage cans and specialty segments. So margins are expected to remain sideways in the near term. The company has also guided the costs to remain stable to costs to remain stable in the near term. So the outlook is neutral on Hindalco. Shyam Metallics and energy result was improving. Revenue came in at 3,380 crores versus 2,920 crores sequentially. EBITDA came in at 414 crores versus 223 crores last quarter. Margins have also improved to 12% from 7.6% sequentially. The stock is trading at EV by a bit of 3 times FY24 earnings. Thank you.
Good morning. Cummins India announced its result. The result is ahead of expectation. Revenue came in at 1,926 crore versus an expectation of 1,845 crores, which sequentially saw a drop of 12% but grew by 29% on a YOY basis. EBITDA margin came in at 16.9% versus an expectation of 15.9%. For the year ended March 31, FY23, the company reported record revenue for the second financial year in a row, driven by strong domestic and export demand. This, coupled with pricing actions and prudent cost management, resulted in a record profit for the year. However, given the emission changes from July and continued supply chain challenges, especially for specific electronic and other components, the company remains cautiously optimistic about the short to medium term demand outlook. The CPCB 4 plus norms will become effective July 1, 2023 for gensets up to 800 kilowatts. The company is ready with its products to meet the new emission norms. The stock is trading at a PE of 35.5 times FY24 EPS. Thank you.
Good morning. Nykaa posted result below expectations. The revenue grew by 33.7% YOY at rupees 1,302 crore. The EBITDA margin reported at 5.4% versus the expectation of 5.2%. The adjusted PAT reported at 2.4 crore versus the expectation of 7.6 crore. During the year, the revenue grew by 36% on a YOY basis at rupees 5,144 crore. It achieved the EBITDA margins of 5%, which expanded by 65 basis points on a YOY basis, and EBITDA at rupees 256 crore with a growth of 57%. 57%. The stock is trading at a PE of 236.7 times to FY24 EPS. The Bayer Crop Science Limited result was marginally above expectations. The revenue reported at 982 crore, which grew by 2% on a YOY basis. The strong crop protection sales and the consistent performance by its corn seeds business supported the continued sales growth in Q4, while overcoming supply constraints faced during the quarter. The EBITDA margin reported at 20.9% versus expectation of 20.7%. The stock is trading at a PE of 24.4 times to FY24 EPS. The Fine Organic Industries Limited result was above expectations. The revenue degrew by 3.3% YOY at rupees 597 crore. The EBITDA margin reported at 33.9% versus the expectation of 22.2%. The quarter EPS was at rupees 48.7 and stock is trading at a PE of 29.4 times to FY24 EPS. Yesterday, there was a con call of Sudarshan Chemical Industries Limited. Largely, the management expects the gross margin to be in the range of 42 to 42.5%, assuming the stability in the raw material prices. Also, the management expects the gradual shift in their specialty chemicals revenue contribution in the overall business on account of its completion and commissioning of the overall capex, which was being invested over the last 3 years. The commissioning of these new projects includes the transformed product portfolio, new product lines, which has a global product range and includes the niche products, and it expects the ramp up in the scale over the next 3 to 4 years. Also, they are more focused toward the export side. It has no major capex plan for the FY24 except regular maintenance capex. Also, there was a land monetization done on 6th April 2023 of worth rupees 356 crore, which will help them to reduce their overall debt by FY24 end. The stock is trading at 18.4 times to FY25 EPS, and the outlook is positive over the long term. Thank you.
So apart from this, Venus 5 has reported numbers, and the numbers were good. Revenue moved up by around 60% year on year and 30% Q on Q. Going forward, the company has embarked on a capacity expansion, and which has started production from the March. So some benefit might have come in the Q4, but going forward, every quarter, the increase in the capacity will have a higher share of revenue, and as such, we will see consistent increase in revenue and profitability in the next 3-4 quarters. So outlook seems positive for Venus 5. Apart from that, Dreamfolk had a con call yesterday, and management has sounded quite positive on the demand environment, and also the margins are also likely to sustain. Dreamfolk has said that the demand will be driven by the increasing traffic on the airport, and also uh, increasing penetration of credit card, and also higher use of credit card for launch services. This will all together, we expect that the revenue can grow at a minimum 20-25% in the next 2-3 years. So that justify the current valuations, which are though around 25 times FY25 earning. Considering it's a low cost model, they generate very high return on equity and return on capital employed of almost around 40% plus. Apart from that, company is taking few new initiatives, they are trying to venture into the international market with a similar model which they had implemented in India, and which can develop a similar type of business in the international market also. Apart from that, they are taking a lot of digital initiative wherein the availability of the launch service for any credit card can be accessed from their website or portal, and which can push the customers for using the launch services. So these initiatives will help the growth to improve, and so we continue to remain positive on the stock, and the outlook remain positive. Apart from that, Sangvi Mover came up with the numbers, and the numbers were a bit below than our expectations. Revenue and EBITDA remained flat quarter on quarter, wherein the expectation was that the fourth quarter should be better than third quarter. The bigger concern was that the order booking was very low in this quarter for the coming period. And as such, the quarter on quarter order book came down from almost over 400 crore to 300 crores. So that was, this happens most of the times in every fourth quarter, as there is a higher revenue and low booking. But this time the booking was quite comparatively quite low. So this had an impact on the share price yesterday. Today, company will have a con call, and will give proper indication as the environment for capital goods installation and all continue to remain strong. So whether it is a blip or it's more of a change of trend will be known once the con call is done. Apart from that, LIC, Life Insurance Corporation, came up with the numbers, and the numbers were okay. We had seen some improvement in different parameters, like VNB margin has increased from 15.1% to 16.2% year on year. VNB also increased by around 16%, and APE has grown by around 12% year on year in the FY23 numbers. So this has all resulted into EV expansion of 7.5% year on year. The stock is available at 0.6 time EV. So valuations are quite low, but the growth is also comparatively low for the company. So that justify the lower valuation. Then Titagar Vegan came up with the numbers, and the numbers were quite good. Revenue grew by almost around 100% year on year, and margins also improved year on year. Quarter on quarter remains flattish. So whatever the order they had won in the past are now getting translated into revenue, and that's why we are seeing revenue expansion in this quarter. So company reported EPS of rupees 4 in this quarter, and share is available at 20 times FY24 earnings. So outlook continue to remain positive on Titagar Vegan. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, in today's session, we might see a correction in gold and silver prices. So, we recommend to sell around 59 900 to 950 levels, and maintain a stop loss of 60,200. uh, 59 700 is a supportive area, but any pullback can again be witnessed some selling pressure. So till 59 700 is holding on, a pullback may be witnessed, but however selling pressure might continue, and it may test 59 500. And if prices are closing below 59 500, then we expect further correction in prices. So watch out for that. And silver prices are also expected to correct till 70,000. So selling around 71 500 is advised, and maintain a stop loss of 70 to 200. Uh, Crude oil prices are supportive above the breakout of 6050 levels. So buying on dips is recommended around 6100, and maintain a stop loss of 6030. On upside, 60 to 50 is the level we are looking for. Uh, natural gas prices are expected to test 220-25 levels. So buying around 210 is recommended, and maintain a stop loss below 205 levels. Copper prices may witness some pullback till 704-705 levels in June contract. So in that pullback, one can initiate a sell and maintain a stop loss of 710. On downside, 695, 690 is the level we are looking for. Zinc prices also have corrected, and a pullback till 210.11 is expected, and again selling pressure might be witnessed. So sell with a stop loss of 215. On downside, 208, 206 levels are expected. That's it from me. I'll ask Utkarsh to take over from here.
Yeah, thank you, sir. Very good morning, all of you. Yesterday, we witnessed a very nice fall in USD INR below 82.80 levels, and prices closes below that level. So and today, one can, for the selling purpose, one can initiate a short position in the range of 82.74 or 82.78 levels, with a strict stop loss of 82.78 levels for the target of 82.59 and 82.50 levels.
In JBP INR, one can initiate a short position if we get any pullback around 102.25 levels with a stop loss of 102.59 levels with a target of 101.95 and 101.75 levels. In Euro INR, one can initiate a short positions in the range of 89.05 levels with a stop loss of 89.26 levels for the target of 88.70 and 88.63 levels. Thank you.